Welcome to TaxAid and Cash Oregon's presentation on Oregon taxes. This will be the first module of 4 on the Intro to Tax Law. Before we get started, I'd like to make a couple points. First, you should have already finished your study on federal tax law. If you haven't, go ahead and stop this video and finish that up, and come back to it when you're done. Second, be sure and take notes on any questions you have on this or any of the 4 online modules. You'll be able to take questions to a study lab to get answers, and you'll also be able to email your instructor. You should get an email from your instructor a few days before class starts. The class itself will just be working through problems and answering questions, and presenting any last-minute revisions to the tax code. So be sure you've watched all 4 videos and done any other pre-work ahead of the class. The live class is also where we'll certify you as an Oregon preparer, so be sure you attend. In this module, we'll give a high-level overview of Oregon taxes and the relationship between Oregon tax and the federal tax code. Most of the time, this makes Oregon tax preparation pretty straightforward, and there'll just be a few instances that need a little bit more attention. Then, we'll get into some more detail, and we'll talk about how the information flows from the federal return to the Oregon return, based on this relationship between the tax structures. So Oregon tax code is based on federal tax code primarily. What this means is that in order to do an Oregon tax return, we'll have to start with a federal return, because for the most part, the numbers tend to be the same. W-2 income is still W-2 income. It's just taxable wages. So there's no reason to calculate it separately on a state return from a federal when it's already included in the federal AGI. So using the federal return, and specifically the federal AGI as a starting point, we will instead focus on the differences between what's taxed in Oregon and what's in the federal taxable income. Anything that's taxed in Oregon but not taxed at the federal level will be added in, and vice versa. This will effectively give us a state AGI. Similarly, Oregon has deductions and exemptions and credits, just as in the federal return, and the numbers can be a little different, but the concepts are essentially the same. A fundamental difference that you'll encounter is residency. Unlike on the federal return, full year, part year, or non-resident Oregon tax returns are all in scope. A move in or out of the state wouldn't be reflected on the federal return at all. But we'd still be able to complete a part-year Oregon return for the taxpayer. Or say someone lived in Vancouver, Washington and worked in Portland all year. We'd be able to complete a non-resident Oregon return and calculate the Oregon tax on the money they made from their Oregon employer. Okay, so calculating Oregon taxable income starts with the federal AGI. But what happens then? Well, based on the difference between the state tax code and the federal tax code, some things will be taxed by the feds but not taxed by Oregon, and vice versa. So anything that needs to be added into this taxable income for the state return will be put on a list of additions. And anything that the IRS considers taxable at the federal level, but not taxed by the state, we'll put those on a list of subtractions. And if this sounds a little bit confusing or maybe overwhelming, don't worry. Most of these alterations will be handled by the software. And for the items that aren't, we'll go over in detail in the later modules. And in most cases, the Oregon taxable income will be pretty similar to the federal, which is why it makes a lot of sense to start with the federal AGI and just focus on what's different. Social Security income is a common example. The taxpayer might also be able to subtract some federal pension income depending on the circumstances, and may add or subtract interest from a government agency depending on the source. We'll go over all of these in more detail in the next module. Just as on the federal return, Oregon allows taking a standard deduction or itemizing deductions. In previous years, Oregon used the federal Schedule A for itemized deductions, with one exception. State income taxes paid on the federal Schedule A cannot be deducted against Oregon taxes, so those would be added back in. This year, the state has its own Schedule A form, and we'll talk about any major effects this might have in class. Let's recap. To calculate Oregon taxable income, we'll use the federal AGI as a starting point and then focus on the differences between Oregon and federal tax code. To capture those differences, we'll use Oregon additions and Oregon subtractions. And, at least at the time of this recording, we would use the federal Schedule A to itemize deductions on the state return, so we'd also use additions and subtractions to capture any differences there. Let's take a quick look at filing requirements. As you can see from this table, the filing requirements for Oregon are much lower than for the federal return. But don't forget, we're starting with the federal AGI. And so a copy of the federal return has to be attached to the Oregon return, even if that return isn't filed. So, for all Oregon taxpayers, you'll want to start with the federal return. Next, Oregon may use the information from the federal Schedule A to itemize deductions, but the instances when it's used can vary a lot. Take a look at this table. Oregon has a much lower standard deduction than what's on the federal return. And remember, if the itemized deductions exceed the standard deduction, the taxpayer will want to itemize. And if not, then they won't. So, since Oregon's standard deduction is lower, they're much more likely to itemize on the Oregon return than they would be on the federal. In fact, many taxpayers itemize on the state return but don't itemize on the federal return. And how do we know when to and when not to? Well, don't worry about memorizing these numbers. The important thing is, make sure and fill out as much of the federal Schedule A as you can when you're working on the federal return, even if they'll likely use the standard deduction. And the software will make the determination of whether to itemize for you. If they itemize at the federal level, the software will use the information from the Schedule A. And if not, the software will ignore the Schedule A on the federal return, but it will still carry the information to the state return if they're able to itemize there. And this is all automatic. So we've talked a little bit about Oregon additions and subtractions, and we'll go over those in more detail in Module 2. Also, remember that Oregon has a lower filing requirement and a lower standard deduction. So you'll want to be sure and do a federal return and fill out the Schedule A, even if you don't expect them to itemize at the federal level. The differences in exemptions and credits we'll talk a little bit more about in Module 3, and then we'll finish up in Module 4 with registered domestic partners, and we'll talk about residency there. Now, I've mentioned a few instances where the software does a lot of the work for you in terms of moving information from the federal return to the state return. This means that for some simple returns, no extra work is needed. Some returns do need a little extra effort to make sure the differences between state and federal law are captured correctly. And then there are a few returns that require calculations or tools outside of the TaxSlayer software. But these we'll be covering in much more detail in a future module. So we have to complete a federal return before we can start on the Oregon return. And before we can start on a federal return, we have to complete the initial interview and intake process. And when filling out the taxpayer's Form 13614, we recommend you also fill out the ASCE worksheet. You'll be able to download it. That's additions, subtractions, credits, and exemptions. This will be a good way to track specific differences between federal law and state law and assist you in completing the state return. This Oregon-specific worksheet will be laid out similarly to the federal 13614 intake form, but there will be some explanations off to the side, as well as page numbers to look in the Oregon Pub 17 for more information. Many of the line items on the worksheet will be covered in the next module or two, so if you haven't, you might download it and keep it as a reference. This way you'll be able to follow along during the modules. Now, we've discussed the idea of additions and subtractions, and that will start from the federal AGI. But what happens next? Well, brace yourself. This is a pretty complete diagram of everything that's happening on the Oregon state return, starting with the federal AGI in the upper right, and working all the way down to the Oregon refund. There's a lot of information here. So to show you how much is being done by the computer, let's take a look at a simpler version. This diagram shows a return with no additions or subtractions, and everything here happens automatically. Let's go line by line. Starting with the federal AGI, the system will subtract the Social Security benefits taxed, as well as federal tax paid subtraction. This will give you Oregon income after additions and subtractions, effectively that state AGI. From here, the system will check for you whether the total on the federal Schedule A is higher than the Oregon standard deduction, and it will automatically apply either that or the standard deduction to the Oregon taxable income. And just as on the federal return, Oregon tax is computed automatically. Even though there's zero this year on the federal return, personal exemptions will flow in automatically as well from the personal info screen. Now the system's calculated the tax owed. The amount of Oregon tax withheld will generally flow from the bottom of the W-2, which you input during the federal return process. And in most cases, the software will calculate the Oregon Earned Income Credit for you. We now have the total payments made on behalf of the Oregon taxpayer, and just as on the federal return, the software will automatically compare the tax owed against the payments and deliver a refund or balance due. And that's it. So while this might look like a lot of information, and it may be a little hard on the eyes, this is all happening under the hood. Now, let's take a look at when you do have some additions and subtractions on a slightly more difficult return. It pretty much looks the same, except take a look at that upper left-hand corner. This is the ORASC schedule, so additions, subtractions, and credits. Any information we do on additions, subtractions, or credits, which we'll talk about in a later module, will show up on this form. Each one has a code that can be cross-referenced to the Oregon worksheet I showed you in a previous slide. But everything else is the same as on the simple return. Let's take a closer look. Just as on the simple return, we'll start with federal AGI. The work we've done on additions and subtractions will automatically show up on the schedule ORASC and automatically flow from there to the main return. So we'll still have Oregon income after additions and subtractions. That's effectively a state AGI. We'll still add an itemized deduction, or a standard deduction, to arrive at the Oregon tax. We'll subtract personal exemptions, and compare that amount to the payments made on the taxpayer's behalf. So even on the trickier returns, a lot of the work is still being done by the software. So that wasn't so bad. So in the next modules, we'll discuss additions and subtractions in detail, especially the tricky ones. And we'll go over residency and registered domestic partners. So don't forget to make a note of any questions you have on this material. And if you're reviewing these slides closely ahead of class, please note that at the time of this recording, the final 2018 versions of forums aren't available. So what you see in here may differ slightly from the live forums, but we'll go over that in class. So that's it for today. Thanks for watching, and thank you so much for volunteering.